This is a paid advertisement on behalf of P2 Gold. What's going on, guys? This is Aaron from Departures Capital, and we're here with Joe Osinick, President, CEO, and Chairman at P2 Gold. Pleasure to have you on today, Joe. How are you doing?
I'm doing well, so thank you for having me.
Yes, so excited to be talking about the company. So, Joe, P2 Gold was founded in 2020, and you and your core team have worked together for over 20 years, successfully building mines like Brucejack through Pretium. Could you walk us through how those experiences have shaped your approach at P2, particularly in advancing the Gabbs project from acquisition in 2021 toward production?
Well, thanks, Aaron. We've learned a lot over the years. We've worked together. We started off together back at Silver Standard Resources, now SSR Mining.
Hmm.
We took that. I joined it in the mid 90s. Ken was there in the early 90s. Michelle joined us in the early 2000s. So our core team comes out of Silver Standard to Pretium and now to P2 Gold. And and what we learned is, well, at Silver Standard, we took this company with no silver resources to having over 2 billion silver resources in the ground and an operating silver mine. During that time, we looked at hundreds of projects for acquisition as well as grassroots projects where we had discovery. And what we learned at Silver Standard, I think it really stuck with us that when a project's marginal, it's always marginal unless there's a game changer. Is there some way to increase the resources? Can you increase the grade? Or maybe there's some technology that's come along. So it's those things. When we look at projects and we see a marginal project, we don't think, oh, well, the gold price will go up and it'll all of a sudden be economic. They stay marginal. So we look for those other aspects. Can we grow it? Can we increase grade? Can we find some new technology? So we learned that back at Silver Standard with all these projects we looked at. Then we went to Pretium, and Pretium had grade, but no infrastructure. Fortunately, the grade paid for a lot of infrastructure. We had to build a 75-kilometer road. 12 kilometers went over a glacier. We put in a 57-kilometer transmission line with two spans that I think are some of the longest in Canada. So that cost a lot. So we realized that you have to have a project that can't be marginal, and the more infrastructure you have up front, the better off you are and the easier it is to build your project. So when we started up P2, first off, I should mention at Silver Standard, we worked around the world, Russia, Australia. We weren't in Africa, but North and South America. And so our first thought was jurisdiction. So we looked at British Columbia and we looked at Nevada, because Nevada, as you know, is probably if not the top tier, it is within a handful of jurisdictions where you can really rely on being able to build a mine and operate without government interference. So Nevada, we focused in, we saw the Gabbs Project. Two things attracted us. One, there was an existing resource. And when we looked at it, we saw there's lots of a potential to grow that resource. Just throwing numbers out, we were about 1.8 million ounces gold equivalent, and we increased that already to over 3.5 million ounces, to roughly 3.5 million ounces, and we have potential to go a lot bigger. So we like that in the project. And then we also like the fact there was a lot of infrastructure. We can drive to that project on pavement. There are roads all over the project. We have water on the project. We have a transmission line that comes right up to the property, a major one that comes right up to the property boundary with a smaller transmission line right through the property. So a lot of infrastructure. So when you put all that together, that experience from Silver Standard, looking at projects, Brucejack, building Brucejack, that really led us into focusing in on a good jurisdiction with a good resource with expansion potential and excellent infrastructure. So that's why we landed on Gabbs.
So let's talk about, value proposition and investor alignment. So with Gabbs moving toward production and a market cap of roughly 20 million Canadian and management owning about 23% of the stock, how do you frame the company's value story to investors wary of junior developers? Like, what makes the economics compelling versus a discovery story?
Well, I think versus a discovery, Well, first off, there's grassroots exploration before you get to discovery, and very few grassroots exploration programs result in a discovery. And of those discoveries, very few become mines. The beauty of Gabbs is we've looked at it. We believe it will be a mine, and now it's a question of moving it forward. We've put our own money into it. We have $9-10 million of our own money into this project at higher share prices than we're at today. And so we have a lot of motivation to make Gabbs a success. So when we look at it, we can say, hey, look at, we've got a resource here. We've got the infrastructure. We've completed a preliminary economic assessment on the project. It shows that if we, for example, at current metal prices, about 3,300 gold, $3,400 gold, 430, 450 copper, this project has a net present value at a 15% discount rate of almost $700 million. And you think about it, that you can buy into a company that owns this project with a 20 million market cap that just by moving it forward can realize that kind of value out of mining the project. So that's where the value is. You're not taking a risk on buying into a company that maybe will be successful and build a mine. We know that we have a potential mine here sitting on our property, and it's just a question of moving it forward. And we are focused and incentivized on moving that forward to production.
Totally makes sense. So now let's touch on location and jurisdiction a little bit more. I know you talked about it briefly, but Nevada is consistently ranked as one of the top mining jurisdictions. Fraser Institute ranks at number 2, and the Gabbs Project benefits from excellent infrastructure and permitting environment. How does location factor into your development timeline and your risk-adjusted outlook?
Well, look at risk. When we, as I mentioned, when we picked this project up, jurisdiction was the top of the heap. That's one thing. You're open to a lot of risk in jurisdictions. You look at Barrick, one of the largest gold mining companies in the world, and they've run into problems in Mali. So it doesn't matter how big you are, and what your economic wealth is, that you still can run into problems in jurisdictions. And so that's why we believe you stick with a top tier jurisdiction. And as you say, Fraser Institute has Nevada coming out number 2 this year, otherwise sometimes number 1. It's always right up there, and you just can't beat that, because you can go in and you have predictability. You can go in, you file your paperwork, you do a good job, you prepare what you need to prepare, you file it, and you will get your permit. The nice thing about Gabbs, it was permitted to go into production in the mid-90s. So a lot of environmental work's been done, a lot of technical work's been done that has already gone through the vetting by the BLM, Bureau of Land Management. So for us, it's a question of updating studies on the environmental side, which we've been doing, and then getting back in there and filing the necessary documents to move us forward and get our permits. But it's a nice, predictable permitting regime, and that's what you want to see. And when you do have a mine and it's operating, you're not going to see the government come in and say, yeah, you're successful, you're making money, I think we'll take a nice portion of that. No, it's, we have the rule of law down in Nevada, same as in Canada, and you can rely on that rule of law. When you own something, you own it. And so you put all that together, it's a great place to be. And when it comes to risk, you take that jurisdiction risk off the table.
So now let's talk ore metallurgy innovation. So Gabbs contains both gold and copper, which historically posed processing challenges in Nevada. Operators usually had to sacrifice one for the other. You now plan to use a SART plant to efficiently recover both. Can you explain how that technology works, why it's a key differentiator, and what your upcoming metallurgical update will show?
Oh, that's a good question, and I should have maybe expanded a bit more on that earlier. And when I spoke about looking at Gabbs and talking about projects that are marginal and stay marginal unless there's some kind of change, well, that's Gabbs. If it wasn't for a SART plant, that project would have been a hole in the ground by the by the mid-90s, it would have been mined out. But gold and copper together in the oxides, it's hard to recover the gold economically because the copper requires increased usage of cyanide, and that high cyanide consumption and impacts on the processing of the solution from that copper make it uneconomic. How's that? So we looked at the project since the mid-90s when it was last looked at it, and thought, oh, okay, well, since then, in the late 90s, the SART technology was first run with a pilot plant. I think the first SART plant was actually put into production down in Australia, I think 2005, 2006. And since then, a number of these SART plants have been built, and they're all for the same purpose, dealing with that copper that's mixed in with the oxide gold and well, cyanide soluble copper. It interferes with your recovery of gold using cyanide. And so, and the way it works, it's just a chemical equation. It's really simple. You have your cyanide, you add it to your well, we're heap leaching at Gabbs. So what we'll do is we're gonna crush our rock, get it down to about a 1/4 inch size. We'll put it on a heap, in a pile. We then sprinkle it with this solution, which contains cyanide. That cyanide solution is collected. We run it through a SART plant. And SART stands for sulfidization, acidification, recycling, and thickening. And so what we do is the solution comes into the SART plant, you add sulfur. Because what you're trying to do is you're turning those copper and silver sulfide oxides into sulfides. So, for example, chalcocite for copper. So you add sulfur to convert them into sulfides. You then add sulfuric acid. And when you drop the pH by adding acid, you get down to about a pH of 5.5, 5.5. You'll find that the copper and silver sulfides precipitate. So they come out of solution. So you can pull them off as a separate product. Once the copper and silver are precipitated, you then add lime to the solution, which increases the pH. You get it up to about 11, and that also regenerates the cyanide, puts the cyanide back into solution, and then you take that solution and you pump it back around. It goes, well, first you run it through an ADR plant to extract the gold. So first you extract the copper and the silver in the SART plant. You run the remaining solution through an ADR plant to extract the gold, and then the solution is pumped back around and put back on the heap. So it's a closed loop, and you're constantly pulling off copper and silver in the SART plant, and then gold in the ADR plant.
Very interesting. So let's talk upcoming catalysts and future paths. So your next major milestones are an updated metallurgical report and an updated PEA, followed by drilling, subject to funding, of course, to upgrade resources. What are the key catalysts investors should watch for over the next 6 to 12 months, and how will each step move Gabbs closer to feasibility and eventual production?
Okay, well, first off, we've been working on a phase 3 metallurgical program for the Gabbs project. And what we're doing there is, again, we're looking at this oxide, gold, and copper. That's what we'll be mining in the first 4 or 5 years entirely. So that has a big impact on our economics. So the recoveries of the gold and copper from the oxides in our preliminary economic assessment were 78% for gold, 54% for copper. Now, we thought those numbers were low based on some other work we've done. So the phase 3 program is purely focused on increasing the recoveries for oxide, gold, and copper. And what we found, we've had some news out. We're going to get some news, additional news out in not too long. And we expect to have increased recoveries. We'd like to see gold go up from 78 into the, say, mid 80s, and copper from 54 up into, say, the mid 60s. So if all goes well, that will be coming out soon. So we're going to have our metallurgy update coming out. Well, we'll have some updated numbers in not too long. I would say early September, we should have some more final metallurgical numbers, along with we're pushing to get an update of our preliminary economic assessment out in early September. If there's a bit of slippage, it'll be mid-September, but not far off. I expect we'll be drilling. The plan is to get drilling, as you say, subject to funding, start drilling late October. And the nice thing about the drilling is we're not looking at infill drilling to start with. Right now, we have just under 3.5 million ounces of gold equivalent resources at Gabbs. And we have 4 zones of mineralization. They're all open for expansion. Plus, there's lots of targets, we believe, that don't, all the 4 zones we have come to surface. So we believe there are a lot of targets that don't come to surface based on historical work on the property. So we're going to get in there and look for some expansion drilling. We have pads already set up for some. We'll get in there, do some more drill pads, and start drilling where we're going to be looking to increase the amount of gold, the number of ounces, as well as the grade. We have some areas where we believe we can pull out some good grade that's not in the resource. So you put all that together, we should have some good news through the fall. We're going to have met results, updated PEA, drill results. And while all this is going on, we're going to be looking at our various options that we have for funding the feasibility study. So there's a couple things we're working on, one of which is the sale of a royalty. We believe a sale of, say, a 2% NSR on the project would fund us through feasibility and essentially get us through to production without any more, to construction financing, I should say, without any more equity issues. So we've got some options here that we're looking at. And so we should have news on that, I would hope, by the end of this year. So if I look at the next 6 months, there's a lot of news that will be coming out over that period. And you should see, we're expecting to take P2 to quite a different level from where we are today by the end of this year.
Awesome. Well, it was a pleasure, Joe. Fantastic environment for gold and copper, the commodity sector in general. I feel like this is what we've been waiting for a very long time. So I'm excited to cover the company. Thank you for all the information and best of luck. We'll have you back on for some updates as more news rolls out.
Yeah, look forward to coming back and talking about things. Yeah, we're excited. Looking forward to the fall.